Stop what you're doing. Seriously, if you own any consumer tech or mobility stocks, you need to see this 5-model valuation breakdown immediately. Welcome back to The Explainer. I'm your host, and today we are tearing into Alps Alpine. Look, while the rest of the herd is out there absolutely panicking over Chinese auto slowdowns and supply chain chaos, literally dumping shares left and right, this under-the-radar electronics pioneer is quietly engineering what just might be the greatest structural turnaround of the decade. Think of Alps Alpine like the hidden central nervous system of your modern vehicle and your smartphone. When their internal wiring gets optimized, the cash flow absolutely explodes. Last week, I ran Alps Alpine's fresh financials through 5 distinct valuation models, plus Warren Buffett's and Peter Lynch's legendary investment checklists. And what I found genuinely shocked me. This stock's intrinsic value could be radically higher than its current, kind of stagnant trading price. In fact, while the broader market was completely looking the other way, they just shattered statutory profit expectations by a massive 16%, proving that their pricing power is entirely intact. But hey, I get it. Retail investors constantly get burned trying to catch falling knives, mistaking dying legacy companies for deep value opportunities. It's the ultimate market pain point. You watch a stock drop, you buy the dip, and then you just watch it drop even further. So we have to ask the bold question today. Is this a classic Peter Lynch turnaround dream just waiting to surge, or is it just another value trap disguised by one lucky quarter? Well, by the end of this explainer, you'll have a clear, actionable framework to steal, and you will know exactly if Alps Alpine is a Buffett buy or a complete dud. All right, let's dive into this. Here is our roadmap to uncover the truth. 1. Breaking down analyst expectations. 2. Driving financial performance. 3. A segment-by-segment breakdown. 4. Their midterm plan for 2027, and 5, sustainability and future vision. Starting with Section 1, breaking analyst expectations. It's all about quality over quantity. There is a fascinating divergence in the latest data. According to Simply Wall Street analyst consensus, revenue estimates for the upcoming year were actually downgraded, down to 1.01 trillion yen. That represents a slight annualized decline. But check out the profitability side. Earnings per share predictions upgraded by 9% to 150 yen. This is a classic quality over quantity scenario playing out in real time. The market is slowly waking up to the fact that Alps Alpine doesn't necessarily need to push massive top-line volume if their recent structural reforms are drastically improving the actual real-world profit they make on every single unit sold. And because of that intense focus on bottom-line quality, the consensus price target held incredibly steady at 2,180 yen. So here's the crucial takeaway. Despite a predicted revenue slowdown compared to the wider industry, analysts clearly believe the improved earnings power will entirely offset that decline. It proves that earnings power, not just flashy top-line sales, is what truly dictates intrinsic value here. Moving right along to Section 2, driving financial performance. Let's look at the actual catalyst for this recovery. To really understand this renewed market optimism, we have to look at the official corporate announcement regarding upward revisions for fiscal year 2026. This grounds our whole analysis in undeniable, hard corporate data. These revised metrics are absolutely incredible for anyone tracking corporate efficiency. They upgraded their net sales forecast from 910 billion up to 950 billion yen. But the real star of the show? Operating income. They revised that from 17 billion yen all the way up to 25 billion yen. I mean, that is a massive 47.1% jump in projected operating income. And overall profit attributable to owners was bumped up by over 22%. So why the sudden massive surge? Well, management cited a few specific tailwinds. First up, a weaker yen expectation, calculating the second quarter at 145 yen to the US dollar. Second, their products in both the automotive and mobile markets are performing way more robustly than initially feared. And third, they managed to skillfully navigate some serious global economic uncertainties, totally avoiding the severe impacts they had cautiously expected from US tariffs and automotive production drops. They are steering this ship incredibly well through some very choppy macroeconomic waters. And here is the direct, tangible benefit to the shareholders: a newly increased dividend forecast. Alps Alpine confirmed a scheduled payout of 62 yen per share for fiscal year 2026. This actively returns all that operational success right back to the people who own the stock. Section 3, segment-by-segment breakdown. Let's look under the hood at the engine of Alps Alpine. We'll start with the component segment, which has traditionally been the bedrock of this company. For the recent 9-month period, they posted 282.7 billion yen in sales. That's a 5.1% increase year over year. Operating profit hit a solid 27.5 billion yen. And what's really fantastic here is that they achieved this growth driven by mobile and consumer markets, even while facing downward pressure from the appreciation of the yen and a shifting product mix. This segment is still a cash-generating powerhouse. Okay, let's keep it real. It's not all perfect news. We have to look impartially at the headwinds too. The sensor and communication segment reported an operating loss of 2.6 billion yen. Why? Well, the market is right in the middle of a major technological transition. They're shifting away from traditional automotive keyless entry systems and moving aggressively toward digital keys and industrial markets. This drop in sales is part of a necessary, albeit kind of painful transition phase to align with where the market is heading tomorrow rather than where it was yesterday. Finally, we have the newly renamed mobility segment, formerly known as module and system. Now, this segment took a real beating in the previous fiscal year because of intense automotive competition and production cuts over in China. But they are bouncing back. They're showing clear signs of stabilization by launching new products focused on digital cabins, recovering costs, and most importantly, making the tough, disciplined decisions to cut unprofitable product lines. Section 4, Midterm Plan 2027, Structuring for Profitability. Let's look at the future. Management's midterm management plan lays out their ultimate financial goal. And it's bold, transforming this recent stabilization into a true V-shaped recovery. By fiscal year 2027, they're targeting 1,085 billion yen in sales and a whopping 67.5 billion yen in operating income. They are showing serious ambition to turn structural reforms into massive top and bottom line growth. So what is the actionable framework to actually get there? It's a precise three-pronged capital strategy. Step 1, achieve a return on equity of 10% by FY 2027. Step 2, maintain a price-to-book ratio of at least 1x by FY 2026. And Step 3, fuel the future by investing 245 billion yen in strategic research and development through FY 2028. They are focusing heavily on sensors, software, and human capital, meaning they aren't just cutting costs, they are aggressively investing in tomorrow's tech. And this brilliantly illustrates how the 2027 plan is really just a stepping stone. It bridges directly into their Vision 2035, where they aim to completely dominate multimodal sensing and human-machine interfaces, targeting 300 billion yen just in the sensor sector alone. And all of this is ultimately tracking toward their massive 2050 goal of achieving total carbon neutrality. Which brings us perfectly to Section 5, Sustainability and Future Vision, looking way beyond the next quarter. Check out their corporate philosophy. It's printed right at the core of their operations. Alps Alpine innovates value for humans and society on a brighter planet. And you know, it's not just corporate marketing speak. Their commitment to blending human-centric technology, stuff like AI-enabled sensing and mobility safety, with real environmental stewardship is baked directly into their DNA and, more importantly, into their R&D budget. They have outlined incredibly rigorous environmental targets. By 2030, they aim to cut CO2 emissions by 30%. By 2050, total carbon neutrality. But honestly, the most striking goal here is their commitment to zero use of virgin materials from non-renewable resources for elements under their direct control. Think about that. That means fundamentally redesigning how they source natural resources like crude oil and minerals for their manufacturing. And these aren't just distant pie-in-the-sky promises for 2050. Look at their immediate on-the-ground metrics. They are maintaining a rigorous 95% waste recycling rate target across all their consolidated operations right now in fiscal year 2024 and 2025. They've also tied their corporate KPIs to achieving zero serious accidents caused by chemical substances. They are making sustainability an operational reality today. So, as we wrap up this explainer, we are left with the absolute core tension of this turnaround story. They've smashed analyst expectations, they're successfully cutting unprofitable lines, and they have an incredibly aggressive vision for the future. But the ultimate question is this: can Alps Alpine successfully execute this massive transition, evolving from a traditional hardware component supplier into a software-enabled systems provider, while keeping this powerful V-shaped financial momentum alive all the way into the next decade? It's going to be absolutely fascinating to track. Thank you so much for joining me on The Explainer today, and keep learning.